Next, we come to dollar yen. And as we talked about the market's risk aversion, so it is clear that in a situation like that, the Japanese yen, which is often perceived as a refuge currency, Japanese yen regained power, and dollar yen went down. Here we have a weekly chart, and the pair has finally made advance inside this weekly Ishimoku cloud. We are now at the middle of the cloud. The pair broke below 200-week moving average at the level of 110.27, and it currently is trying to find refuge at the 50-week moving average located at 108.30. This line can provide some support for the pair, but if the geopolitical tensions keep intensifying, then we'll surely see dollar yen getting much lower. The next level, the next potential stop here is the Fibonacci retracement level of 61.8%, located at 106.50 area. And when we'll get to the bottom of this bearish small cloud, located near 103.75, and the next Fibonacci level near 103 itself. So this is the weekly chart. Let's see the daily chart. Here we have the negative intersection of the moving average. The 50-day moving average went below 100-day moving average, and the pair is also trying to erode 200-day moving average, which used to support the prices for some period of time. We had already the pair close below this 200-day moving average on Friday and below the 50% Fibonacci retracement. So I think that the pair is very vulnerable to get lower to the area of 106.50. Of course, the pair is a bit oversold right now. So we will be looking for an opportunity to enter a bearish position. But if you have one, maybe holding to it won't do much harm. On the 4-hour chart, we can see that the pair is a bit oversold. There are signs of some correction at the 4-hour chart, but we'll meet a resistance and the potential area to re-enter short positions is the psychologically important level of 110, the former support, which is now a resistance. You can see here the resistance line, the moving averages on the 4-hour chart, which are going to the downside, and also the previous line here. So we will be watching at 110 for the pair to recoil to the downside from this level, targeting 106.50 mark. Fundamentals for dollar yen are not very interesting. We have this factor of risk aversion. We have dollar suffer from the sayings of Donald Trump. We can see that Trump showed willingness to talk down the US dollar, and the aggravation of political conflicts offered a significant boost to the yen. We will be looking at the developments of the situation between the US and North Korea. On Thursday, we will be watching the speech of the US Treasury Secretary Mnuchin, and it might be important to clarify plans of Trump's administration towards the end of the week, the US dollar might recoup some of its losses if investors think that it might be difficult for Trump to achieve a weaker US dollar. But with the recent deterioration of the US data, probably the negative factors will prevail over the positive factors for America. So the technical levels, I think I've made clear.